Good morning, everybody. Cowboy here, 8:30 a.m. EST. Correction, 8:31 EST. How we all doing? Let's go ahead and jump into the charts. If you want to see what we do at Algo Factory, just zap the QR code top right-hand side of the screen. You can find out how we make people become traders. We help people learn how to trade, help people build their own trading method, and it's great. All right, so let's see. It's Wednesday. I know that obviously short week and it's early September. August is a pretty slow month in markets. And we did have a couple of moments of excitement in August, but overall it was pretty slow. We can see that the stock market did have a little bit of a tumble. This is the SP 500, the E-mini, and this is going back to yesterday, pretty much like in the middle of the night. The futures dropped and there was the market open down and went from about a high at 56.70 down to 55.19. So we had a little bit of a drop in the equities index here. And that was of about 2.8%. It's pretty substantial to happen in a day. So if we zoom out a little bit, we can see kind of the general trend is very much bullish and up, but we just saw a pull back down. And historically, going into an election, these things do tend to chop sideways. So we might be looking at just basically a continuation of sideways, right? Maybe the upper and lower bound may look something like this. Maybe. It might be a little different than that. We're going to find out in the next few weeks, but price might just kind of bounce between 5,100, 5,700, something like that, and continue into the election. And that might be it. Might be relatively uneventful. And that's for the SP 500. I imagine the Dow looks very similar, pretty similar. The Dow apparently didn't fall quite as hard. And the QQQ, aka NASDAQ, did take a tumble, right? So everything took a tumble yesterday, and it looks like the QQQ is going to open a little down because the futures are, they're below open. Nikkei 225 also took a tumble. So I bet you all the equities across the board, like the DAX and the FTSE and all, I bet you they all took a little bit of a dump. And it might be relative to the strength of the dollar. I'm guessing that might have gone up. Let's see. It's possible. Look at the Dixie here. And again, this is the strength of the dollar compared to other currencies. Not a lot of action. Over the past week and a half, it has gone up a bit. And that's widely maybe because of price action. Looks like there's a pretty high time frame, range here where price kind of likes to bounce back and forth. And it got down into this area. Let me zoom in just a hair so you all can see the numbers. Okay. So you can see where it just bounces back and forth, range bound on a high time frame between about 100 and 106, 107. And it's at the bottom of that. So typically, we would expect this to continue to bounce upward up to from the where it is now, 101-ish, 102-ish up to 106. And as the dollar gets strong, most things get weaker. However, it's not always going to be the case. So what we want to do is take a look at the algos and see what they say about the Dixie right now and whether or not it could bounce to the upside. And it could. It's possible. I'd say if not, it's either going to bounce to the upside or it's going to kind of hang out where it is and then maybe even make a historical move down, right? Because if we look at the weekly, we're going to get obviously a bigger picture of what's going on. And high time frame, very high time frame, things are actually a little bit bearish, right? So what we might be looking at and witnessing is this maybe a giant break to the downside where the dollar just gets weaker and weaker. But every time so far, 1, 2, 3, 4, 5 times going back through 2023, it's always bounced around about 100, right? And it's now looking like it's forming a bounce around 100. But again, things are high time frame bearish. So we might see some kind of a move up. I might look at a high time frame fib move to like a 382 which would be roughly 102. Might see that, and then it goes down. We'll see about it. Mavbet, good morning. SG, good morning. SG says, "Holy crap!" Tell me what that's about, SG. What do you see that's making you say "Holy crap"? Let's be, see what that's about. That's a big one. You looking at the SP 500 for "Holy crap"? Let's see. Let me do a quick look on here. The dollar? Yeah, I mean, it's not that big of a move. So Dixie's not going to have any volume data on here. So yeah, I would look to maybe just to pull up to about this 102 if it's going to head down. And if it's going to do with any strength, it'll probably reject right there at about 102 and head down. If it's not going to do that, it may actually head up to the 104, and then who knows? It also, even if it were to head to 102, it might not break down right away. It might actually, play around kind of range in this area and eventually make its way down. And a lot of that's going to depend on what happens with, the Federal Reserve. Are they going to cut rates? Are they going to raise rates? This is all, a lot of it's going to be event dependent, if you will. Lastly, we'll take a quick look at Bitcoin. SG, are you in the Algo Factory? I don't know. I know I see you in here a lot, but I don't know if I can place you as an Algo Factory member. Let me know. Let me know if you're already with us. Let's take a quick look over at Bitcoin. I haven't looked at that yet this morning. Unfortunately, got moving a little bit late today. Looking Z bearish. Yep, looking Z bearish. Looks like it's going to continue down a bit. Move down to, let's see here. Yeah, see, 56K was a pretty obvious target. There were some, actually, no, it wasn't that obvious. And the reason it wasn't that obvious was because there was no liquidity down there. But I did tell everybody at Algo Factory that right now, at least as we looked yesterday and the day before, SG, okay, got you, SG. At least as we looked before, there was no like liquidity from the perps down here, right? So you didn't see any liquidity from like the perpetual contracts down low. So that being the case, we didn't see a reason for it to go down for that reason, but the charts have just been bearish. I mean, that's just been it. The charts have been bearish. So with bearish charts, you expect price movement down. And then we didn't really have any targets besides like prior order blocks and stuff like that, which 56K was a prior order block and 53K is one below that. So let's take a look and see where it is now. A lot of liquidity sitting at about 50,000. And there's more of it like all throughout below. Most liquidity is topside. There is some pretty sticky liquidity sitting around. Well, no, that's right. A lot of liquidity is gone now. That was around 61. People got scared out of those shorts and they shouldn't have, but they did. So yeah, from 49,500 to 49,700. That's where that's where you'll see the liquidity. So we can put, and again, that's just that's perpetuals liquidity. There's other liquidity considered, but that's real data, right? That's actual trades that are on that can get knocked out. So we'll put our data block down here. And for now, it's there. We don't know if it's going to be there tomorrow or the next day or the next hour, but for now it is there. And we have a couple of other areas. 53,000 in particular has been important in the past. So, that is a number where price may go again in the future. We got 54,000 and 53,000. So there's all kinds of little areas on the way down where this may go. Another way to look at it might be for a Fibonacci extension from here. Strong move down. So yeah, we got a fib target in between these two, in between 54 and 53. So if I were to just take a guess and, think it's going to continue going down, let's do another quick look here on the lower time frame. Yeah, strong target just below 54. This is a double 618 down here. So even though there's some structure right there in the way, if I were to just short right now, I probably would be looking at a trade like I'll show you. I'm not in this trade, so I'm just kind of mapping one out that I might take, and conditions would have to be proper. But let's see here. Yeah, I mean, the time to enter would be kind of now for that if I were to do it. Something like this, maybe. Again, I'd have to consult the bones, consult the algos. But something like this, we might have to give a little more generous of a stop loss, but it's a pretty decent trade right there. You know, I did tell everybody that this could easily head down to low 50s, maybe even 44,000. You know, it's it's a different cycle than before, folks. A little bit different. Every cycle has its own, every 4-year cycle has its own quirks. So, and price really overextended prior to the halving. We got an all-time high before halving of the first time ever. So, via the Guerilla, how you doing this morning, sir?
Greetings to you in the name of the Almighty.
Are you drinking the dark roast?
I always drink the dark roast, my friend.
All right.
Once you go dark, you will never go stark.
Once you go dark, you take off clothes in the park.
This is also very true.
Ah, boy. Well, you came in just in time to get us over to the private.
Oh, that's what I do, man. That's what I do.
Yeah.
Guys, listen, you want to go to the private because you know what? The summer's behind us. Intel, everybody's back in the office. Intel's coming in. Next Thursday, there's going to be a big, fat, juicy drip with some key intel pieces of what's happening in the industry you don't want to miss. And if you don't want to miss it, join us for $1.66 per day. You could afford $1.66 a day. That is cheaper than a bottle of water. Okay, that is cheaper than a bottle of water. So you can afford it. You know, cancel your Netflix subscription. It's not doing anything to you. You know, it's not doing anything for you. And join us here, algofactory.tech. We'll show you how to actually make real money and have fun in the process and learn. And learn a skill that will last you a lifetime. With that being said, Cowboy, take us away. Join us or die, people. Join us or die.
Join us or die.
That's what you call